We posted a new closing high on February 19th. It seems a lifetime ago, but it was less than 10 trading sessions. Our next guest says the question remains how much of the market reaction was due to the unfolding virus event, or was the market looking for a reason to take profits? Howard Silverblatt is Senior Industry Analyst, Index Investment Strategy for S&P Dow Jones Indices. So, Howard, we're also looking at a market now up 1,000 points, and we were up more than 1,000 points on Monday. When you're looking at the volatility we're seeing, what do you think is driving the tape here? You posited this question about, is it the virus? What do you think?
If the virus never happened, okay, and we had this kind of volatility, we would all look at the bull was going to be 11 years old, the PEs were over 20, even the forward ones were a lot high, earnings were not good last year, they weren't projected that high at that point, it was about 6% this year. We were due for correction. However, we got a lot more of a correction now. That's because the virus came in and it is real. There's definite impact. There's impact that we can quantify already by companies telling us. A little bit, about 110 companies have warned on it. Only for Q1. Nobody's going farther. We hardly know what's happening now, much less this Q2, which is a concern. So, but a big part of this is the market was looking for a reason to go down. However, Corona is real. The impact is real. The volatility, where we stand in the last couple of days, shows more the battle between the bulls and the bears coming in together, changing allocations as well as perceptions. Because on Corona, you can only deal on perception. We don't have the facts, regardless of what the monetary or fiscal you do.
Well, I'm glad you mentioned perception, because even though coronavirus is real, and we had a lot of companies warning on it, last week, the losses we saw, and this is before this emergency Fed cut yesterday, but the losses did seem kind of exaggerated. I mean, so much of it was panic selling, wasn't it? I mean, we had some people coming through here saying the general economic data doesn't really support this much of a drop in stocks for this many days in a row. So I understand what you say. We had gotten high enough that the market wanted an excuse to go down. But even with the companies that had warned we're going to see a hit to our revenue from coronavirus, it seemed like last week was kind of more brutal than it should have been.
It was definitely more of a knee-jerk reaction because the market hates unknown, and you didn't know how long this was going to go. You didn't know if it was going to go past when the weather starts changing into the summer. You didn't know.
Still don't.
Right. You don't know how it's going to affect the consumer, and the consumer is key here. They're well over 70%, of the spending. Okay, so that's corporate profits that are going there, and they're making up for corporate expenditures, capital expenditures, which are going up, but are pretty weak relatively, including right up to the Q4. We don't have the Q1 numbers yet. Okay, so if it impacts them and they start closing schools and parents have to stay home and no one goes to the movies. I mean, pulling back, that's the concern on here. I mean, besides the humanitarian side, the street's worried about profits. And that's the difficulty here.
And Howard, as you just look at the market's behavior over the last couple of years, we saw February 2018 sharp sell-off. Fourth quarter of 2018 was kind of a washout that happened in a couple of different waves. This has been a 12% correction in 6 days. Is this kind of a new normal for this market? I mean, is this like any period that you can remember in your career watching the market?
This looks calm compared to like 87. I'm in this business 43 years almost, and 87 it was crazy. If you remember, even in 08 and 09. You had days where you were up 2% at 3 o'clock, and then the night trade switched it, and you closed down for the day. Mm-hmm. So the volatility now, which is large when you plot it all the way back, is not as bad as it used to be. But we had so little volatility over the last year and a half. Remember, we were counting how many days didn't move 1%, how many didn't even have a 1% spread between the high and the low. Yesterday we had a 5.4% spread. We were up when they made the announcement, and then you ended up down. Today you made it back, which the market started to react to the politics of the situation, which is nice because the market would like to deal with politics. They know how to play it as compared to the Corona. You don't know how to play it because you don't have the information.
I'm glad you think this is calm.
Well, relatively, but it is extremely volatile compared to where we've been the last 2 years. At least back then, it was volatile all the time. It increased a lot more, but you were coming from a more volatile period. Now we were all calm. It was like going up.
So as somebody who knows the market and has been through this a couple of times, what are you watching sector-wise? What's been noteworthy to you that maybe people haven't been talking about, but that we should keep our eyes on?
Well, I've been trying to look a little bit behind. First, you have, obviously you have individuals, whether they panic or not, and that's a major. But how are the money managers, how are they reacting? Are they reallocating themselves, or are they buying instruments, which are expensive to start buying calls and puts now, trying to do some kind of a hedge? But it's good insurance, especially if you're looking back more than a quarter. You're going into the end of 2018. You've got these profits in there. You'd like to protect them. A little insurance might not be bad. So I'm looking at those, as well as the fact that we are buyers out there. And we saw that coming in last Thursday and Friday. Okay, if you want to buy for the few days before that, you weren't getting in. I mean, there was so much selling out there. Just sit back and you wait. Last Thursday, Friday, we had a couple of buyers coming in, the sellers, and said, okay, then I'm getting out. And they were playing back and forth. And it's not so much who's winning or losing, but it's that once you get rid of the buyers, there's money on the side that can come in. The question is, if Corona hits a second leg there and something comes in, you're going to get a lot more selling.
Howard Silverblatt is Senior Industry Analyst at S&P Dow Jones Indices. Great to see you. Thanks for coming in.
Thank you for having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.